Good morning, ladies and gentlemen, and welcome to the show. Today is January 17th, 2020. It's a Friday. TGIF, guys. Listen, having a lot of trouble with my mouse this morning. Slowing down my production of my show. But anyway, I'm getting in there. I'm trying to get it done. And so I'm going to get the chart started right. Well, I would just drive down and get a new mouse, but it's snowing pretty heavy out there. Roads are slippery, and it's awful weather this time of year. Anyway, let's get started. Let's open up the charts right here. You know what we're looking at here? The trade deal between the United States and China. I think the pressure is on not just one side, but both sides. On the part of the United States, they know that if the Chinese economy falls off a cliff or really falls out of bed, it'll carry the United States economy down with it. Trump knows this, and the stock market's everything for Trump. And, the Chinese economy is starting to roll over big, and it's going to get worse as the year progresses, but this is a stopgap measure, and this partial, I would call it more of a trade truce, but this is part of the reasons why right here what's happening. The Chinese GDP, the first chart we're looking at here, Chinese industrial production. Year over year, it's falling right now. It's roughly 5.7%. Chinese retail sales are really falling fast and hard. That's the third chart down here, year over year, Chinese retail sales. It's just falling. Chinese fixed asset investment, falling. Chinese property investment. Now, this is a really important one. This is a real indicator. The Chinese property investment is starting to fall really steeply. And also the jobless rate in China is going up right now. So they're getting more people, the jobless rate's going up. So we're seeing the Chinese economy starting to roll over. And I believe that when the first quarter numbers come in, they're going to be really bad. Everything is going to be pointing downwards. But we're going to have to wait until the first quarter numbers are in. We're going to have to wait a little while for that, Anyway, the Chinese economy, if it rolls over and worse than most of the other economies, because it's such a big, powerful economy, it'll have an impact. I don't care, I know right now they're in this kind of mood where bad news makes the stock market go up. Good news makes the stock market go up. But the analysts out there have known that the stock market has went up so much lately that the analysts out there are actually forecasting a 10% drop in the stock market right now. They're forecasting. I think it's going to be more like 20% myself. But here's the thing. The Fed is going to step in. I think this is going to happen pretty soon. I can't tell you exactly when it's going to happen, but I'm kind of expecting about a 20% drop in the market. And when that happens, I'm expecting the Fed to step in. And how they're going to step in is back to real quantitative easing on top of their treasury purchases that they're making on the short end of the yield curve. I think they're going to start buying the whole yield curve. In other words, directly, they're just going to be directly pouring money right into the system. And I think that'll turn the stock market back around again and make it start to go up. Also, it's very highly probability when that happens that they're going to probably lower interest rates. They'll probably drop them a 0.5 percentage point in one move, 50 basis points. It's kind of what I'm expecting coming right up in the near future. Let's take a look at the gold price today. And we see gold's catching a bid today, $5.30 up, $15.57.20 for gold. Let's take a look at silver, see what silver's doing. Silver's at $18.02. It's up 12 cents. It's a pretty good little move upwards, and it's moving up right as we speak. Right now, it's moving up. But, it's not where it should be right now. Gold and silver are not priced where they should be. in a free market, considering what little bit of a silver that they have, actually real physical silver, silver is the one that should be a lot higher. Right now, silver should be in around at least $60. You know, to be anywhere near inflation, it should be $60. That's what I think. That's my personal opinion on it. Anyway, let's take a look at cryptocurrencies today. I mean, that's not where it is, but that's where the price of silver should be if they didn't manipulate it so much. We're looking at, for cryptocurrency, we're looking at $241.1 billion, 66.3. That's the cryptocurrency. That's all the coins. Bitcoin itself is at 87.94. And it's been looking very strong the last few days. All of the coins have been looking very strong. And one of the things I have to note is Bitcoin SV, Bitcoin Cash, and Dash have all caught a really enormous bid, you know? Ethereum Classic has caught a big bid too. And they've all went up rather steeply in price. You know, they've went up a lot, those coins. These are signs that are very bullish for me in the cryptocurrency market. I was expecting a little bit of a downturn and another buying opportunity to come along. It might not. Cryptocurrency is really proving to be very strong. It's starting to make the transition from a speculative investment into a safe haven asset. That's what's happening right now. It's making that transition, especially Bitcoin. Let's take a look now at the Dow Jones. Nothing to see here, folks. It's up again, 34.52. I mean, every day it's up, 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 up. You know, what goes up must come down. Here, let's take a look at crude oil today. And crude oil has leveled off and came down a little bit, but now it's up a little bit this morning, 24 cents, 0.41%. 58.76 for sweet light crude. Let's take a look at the U.S. Treasury market. I don't like this new chart because the font is too small on it. It makes it hard to see, you know. You got to put your glasses on to see it. We're looking at the yields rising on the long end of the yield curve, starting on the 3-year, moving all the way out to the 30-year. We're looking at roughly a 3.3 basis points on the 30-year and 2.3 basis points on the 10-year. These moves up in yields. 1.83 on the 10-year, and the U.S. 30-year is at 2.29. Let's move on to the U.S. dollar index right now. And we see a rising dollar priced mostly against the euro, 97.53. I mean, they priced the dollar against a basket of currencies, a British pound, the euro. Those are some of the main contenders in the basket. Well, they're not very good themselves. The dollar's better than them, and that's why the dollar is priced so high on the U.S. dollar index. This is why we could see the dollar staying strong on the U.S. dollar index, while we see the beginning signs of very profound consumer inflation. That's what's coming. Because, you know, the Fed is front-running the crisis. They're trying to stay on top of it and not allow it to happen. And you know, very strange times we live in right now. Listen, thank you guys for listening to this market report. Give a thumbs up, like and subscribe, and we'll catch you guys in the very next show. And you guys have a great day. Bye-bye.